Right now, it is time for the Executive Edge.
Yes, Jim Cramer sat down with Barry Sternlicht, CEO of Starwood Capital, on Mad Money last night. Asked about the health of the U.S. economy. Sternlicht says that the costs in real estate in that market are rising for materials and labor, and we may not feel the full effect of the tariffs right away, not till next year.
You're going to see their impact, I think, in the first quarter of next year, right? Because the inventory was here, it's on the shelves, it's in the warehouse, it was bought without the tariff. So you're going to have a latent inflation pressure in the market, which the Chinese are trying to deflate by knocking their currency down, which Mnuchin said yesterday, don't do that. Doesn't mean they won't continue to do it. So they knock the currency down 25 and 25% tariffs. It's flat, right, to the consumer here. But I think the Fed is going to have to be careful. The economy is not quite as strong as the number indicated.
Our guest host for the hour is Peter Boockvar, and I guess now you gave me some new info based on what Barry was just talking about, and that is, I was saying if inflation stays, dormant, quiescent, stays where it is right now, that we don't need to worry, but you're saying we're already a couple of percentage points below on where the short rates are.
Historically, I mean, the Fed waited so long to reverse their policy. Powell is in this box of trying to play catch up, and he was left with a tough situation. And
I just wonder if, and I never say it's different this time, but with where rates are around the world and everything else, I wonder whether that normal relationship between Fed funds and inflation is really the appropriate level. Obviously, it's not, because it isn't where it is. So maybe it doesn't, maybe that's not as big a problem as you're making it out to be.
Hopefully. But the new neutral rate is only 100 basis points above the rate of inflation, according to the Fed. Historically, it was much higher. So just by that, they're telling you that they're not going to be able to get to that old relationship.
This is getting interesting. You know what? We all of the stuff we talking about, it's really about them again. It's about the Fed again. We got to go back to that. Leisman's going to be here every. It is. Yes. It's not tariffs, earnings, tech, everything else, and we're back to talking about every utterance of every Fed person. We're back with the Fed. It's bad to get so dependent on the Fed. You think they have a plunge protection program ready to go? Do you think? I mean, we used to have a put. Used to have a Bernanke put. Used to have a There was some type of put that we thought we had. Maybe is there no Powell put?
Powell, it's further out of the money.
The put is further out of the money. It's a good way of expressing that.